Hey everybody, it's BJ.
And Patrick.
And we're back talking all things real estate. And most recently, we just had the Bank of Canada lower the fixed rate.
Right.
Quarter point.
Quarter point. So we're at 4.75 down to 4.5.
So, what does that mean for everybody else?
It's going to save real estate.
Yeah, it's a little bit of a, we heard on the last one? This was great. Somebody, might have been Royal Bank or somebody like that said, it's like bringing a butter knife to a sword fight.
Oh.
It was a great line. But the point is, I think there's value in what is happening. The government is, it's the Bank of Canada, not the government. The Bank of Canada has recognized that we're seeing some issues with some control of inflation, but some issues with unemployment and slowing down of the economy, and recognizing that if you're going to get the economy moving, this is one of the ways to do it. And of course, the byproduct of that is it'll give some people a little bit more room when it comes to mortgage affordability.
Yeah, not just new home purchases, but renewals.
Renewals, yeah.
So it's still going to be painful if you're coming off of, some crazy low interest rate.
Yeah, if you're at 275 or something.
Yeah, and then you're going to be basically, I don't know, maybe it's not quite double the payments, but it's still going to be significant, especially if you are carrying a larger mortgage. But so that's going to provide some relief. I think we said this even on the last one, where it starts to become under 5% for the fixed rates.
Yeah, well, and I think the point too is that we see progress. How's that? I think for a lot of people, it's just the fact that there's some progress happening. And, we know from the last previous to this one, the interest rate reduction, I believe it was BMO that had put out the survey that they had, that 70% of buyers were waiting for interest rates to come down. Now, we've talked about the Victoria market quite a bit, but I'm gonna say this again, that if we wait for interest rates to come, they're never coming back in our lifetime probably to where they were, from what we hear. But let's say they come down significantly. The reciprocal of that is prices are going to start inching up again, because you're going to have more people coming into the market.
Yeah, it makes, and I'm telling my clients this, I think in the next 2 years with lower, this is my prediction, if we have a continued lowering of interest rate, and this is, I think it's not just the inflation numbers, but the economy contracting, and this happened last time we went from 2007 to 2008, 2009, we had the big market, the stock market crashed.
Yep.
Not as, maybe inadvertently, real estate loan practice bad mistakes or fraud or whatever it was, that resulted in a stock market crash, and then real estate suffered because of that, right?
Right.
It took the confidence out of all of people's buyer sentiment. There we go.
Yep.
So where am I going with this? I'm going with this is a natural cycle that we're going to go through. We're going to go through a slower spell, where the slower part of the cycle, showing that buyers won't have a strong sense of urgency to buy, because the economy is going to be slower, and the news is going to keep repeating this, and the GDP is the lowest out of the G7 countries, or whatever nonsense. Not nonsense, but it doesn't give you the full picture when you're just watching the news. It doesn't break everything down for you. So in the next 2 years, while this is happening, while we get more affordable interest rates, prices I don't think are going to drastically change, because the sentiment the fear of loss is out of the market space.
Right.
It will become cheaper to carry these mortgages as interest rates come down. But that has to build up over time.
Right.
So the last time it took 5 years of, relatively flat performance. and then it started picking up in like 2015, maybe 14, 2015, 2016.
Right.
And we went through a little bit of a hot market, and then it settled down a little bit again before COVID happened. So, you know, I think in the next 2 years, while the financing costs, carrying costs for properties are going to be less expensive, we still have to get through the people who overspent. Even if the interest rate is higher than the historical lows,
right.
I think there's going to be opportunity in the next 2 years, either to get into the marketplace or get a really good deal. That's where I'm leaving that.
Yeah.
So I don't like. I know there's there's the inverse relationship with interest rates and prices.
Yeah.
I think it takes time before that relationship happens.
Yeah.
Because right now it's like, you know, we lost a quarter point in June. We lost another quarter point on interest rates now in July. Some properties are going up in value, or in the, let's say, the median price sold, while some properties that need a lot of work because of it needs repairs.
Yeah.
It's in a bad location.
Right.
Whatever, those properties will historically suffer most on their prices.
Right.
Than homes that are in good locations, good repair, or good condition. Those will at least maintain their value over time, if not even go up.
Yeah.
So I know you're making a blanket statement. There is that inverse relationship.
Well, it's coming. It may not be right immediate, but I think we know that as
There we go. There's a delay on that.
Yeah, as people start to get into the market, just like we didn't see the interest rates the raising of the interest rates do anything to the market immediately.
That's right.
But the shockwave came, right?
Yes. Yes.
So the same way, it's going to eventually go the other way. But I think, you know, we had so many interest rate bumps,
Yes, 7 in a row.
Right, 2 quarter point bumps, drops, which are wonderful. I'm happy we did them. Are not going to make up for that.
No, and right. And as the increases took time to affect our market, so will the decreases.
That's right.
And I think that's probably the best takeaway, everyone watching or listening to this video, from what we're trying to say about like the activity or movement with the interest rate related to real estate pricing.
Hey, thanks for joining us today. Hope you got some good information out of that. Please take a minute and like and subscribe. It helps us out with getting the word out there. If you know anybody who you think needs to see what we're talking about, please let them know about it.
And of course, if you're thinking of buying or selling real estate in the Greater Victoria area or anywhere on southern Vancouver Island, you can get a hold of us. Our information is in the description below, and we'd be happy to help you. Thank you so much for watching, and we'll catch you in the next video.
See ya.